There's that bell. Okay, so welcome everyone to the Rotary Club of Coronado to our weekly meeting for January 11th. Already the middle of January. So I want to welcome all the members, all the guests here at CYC, and also all the members and guests that are joining us on Zoom. So let's start with our inspirational invocation and pledge by past President Daniel Stewart. If you'd please all rise.
Thank you, Dave. Don't whisper it with a microphone. Please all assume an attitude of prayer or reflection. As we sit down today to break bread with friends and associates, all of whom desire to make the world a better place, let us remember that each of us in our daily lives has the opportunity, and as Rotarians, the responsibility to set a positive example, right or wrong, demonstrate graciousness and restraint, find something about which to be positive, offer a helping hand, and renew our commitment to the Rotary four-way test. We ask your strength to accomplish all these things. Amen. Join me in the pledge, please. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Thank you, Dan. Okay, so past President Dan Orr, if you come up for our visiting Rotarians and our guests.
Well, we got lucky. 3 people at least found us, including engagement and marketing from the Kansas City, Missouri Club. Where's Pat Stark when you need him? Jessica Stewart. Where are they? Oh, there they are. And a business owner from Club 13, Kansas City, Nathan Stewart. And our old pal.
I thought you said 3.
What?
I thought you said 3. You only announced 2.
Yeah, our old pal.
Going. Okay.
Formerly in oil and gas, now in real estate, from Red Deer, Alberta, Canada, Jack Donald. Oh, if anybody's on Zoom, please make yourself known, or if I didn't get anybody signed in, or we have guests of Rotarians. Guests of Rotarians.
I've got one guest right here. John Jacobson is visiting us today. This is John. A lot of people know him from Beer Club.
That can't be good.
Any other guests?
Michelle.
Okay.
I have a guest today. It's my husband, Ted Gilmore, and his birthday was on Sunday.
Oh, Jane.
President Lou Ann, fellow Rotarians and guests. My guest today is Kelly Ronimus, Certified Financial Planner with Plan to Prosper.
All right, we done?
I think we're done, except do we have any guests on Zoom at all? If you do, if you're a guest, if you just unmute yourself and say hi. Okay, I think we're good. All right, so what we always do is have the red badgers acknowledge them. So as I read your name, if you just stand up. Sarah Cheverton. Sarah's over there. Ronnie Hauser. There's Ronnie. Georgia Farrell. And Georgia's here, right here. Michelle Gilmore. Michelle's right next to her. Arlene Inch, right here, our newest member. And then Jacqueline Trapp and Eric Trapp, right there. And then I think John Meisner's here. And Jerry Brown, right here. Okay, did I miss anybody else? I think I got everyone. Oh, okay. I'm sorry. I know. And Mike Jensen. Mike's going to give us Who Am I in a couple minutes. So again, thank you to everyone, and please make yourself known to them when you get a chance. So announcements, if we can have that slide, and while they're putting that up, if you noticed at each table, we had a reserved spot for a new member. So if you're a new member or Red Badger, say a new member within the last year, year and a half, there will always be a reserved spot for you at a table, and that's also for all the members to know who a new member is and to actually talk with them at the table while you're eating. So we're going to try that, see if it works. So as I was saying, things that I do when I have time off, the mind goes. Okay, so the announcements. So tomorrow is the January social. That's at Carol Summers' home at 1510 Maria Place, 5:30 to 7:30. And again, you know, if there's someone that you haven't seen around for a while, give them a call. Say, hey, I'll meet you at the social. It's a good way to talk to people, meet people. If you're new, please come. And also, don't forget to bring your own cup. We're trying to get away from plastic again. And then if you bring an adult beverage to share and an appetizer. Then the next is a beach cleanup. That's Saturday, January 14th, this coming Saturday. That is at Isabella and Ocean, and it starts at 7:45. Then Flags on the Avenue, Monday, January 16th. It'll be this coming Monday. That's Martin Luther King Day. Meet at First and Orange. The flags go up at 7 and they come down at 5. So board meeting, the next board meeting, is it come down at 5? Oh, it's 4. Okay, I got wrong information. It comes down at 4. Board meeting, Tuesday, January 17th. And then as you'll see at the bottom, it's the IB Pantry Food and the Clothing Drive. We're going to start that. We have that new committee. And Ginger Cox is going to talk about that in just a few minutes. And I just want to say that that food drive for January is going to end on January 20th. So next, if you notice again that we have the Coronado Rotary Thank You Board, we get a lot of notes. Thank you from people, things that we've donated, things that we've done. And so when you come, I'm going to put it out probably twice a month. And just take time to read some of the letters. They're very nice, and thank you to all the members. Okay, so care and concern. As you know, that Tom Smizek was in the hospital with COVID, and we hadn't announced it last week because of being private, but Jane Summerall spoke to his family, and he got home on Saturday. He's doing much better. So I'm sure if anybody wants to get a hold of him, and say hi, give him a wish to get better, I'm sure he would like that. Okay, so then the next slide. Just recently over the weekend was the Rotary International Assembly, and that was held in Orlando. It used to be held here, if you remember that. And the new Rotary International president-elect for 23-24 is from Scotland. That's Gordon McNally. And here, okay, if we can kind of move the chat thing down so you can see that. There he is announcing what the new theme is. Like this year, it's Imagine Rotary. Next year, you're going to see a lot of that, create hope in the world. And I think that is a great theme that will carry on for many years. Okay, so next, Limbs of Freedom. We talked about it last week, that they need shoes when they go down there and to Ensenada, and we provided shoes for them. They need new shoes to go with their new legs so that it's even, and so we have a sign-up sheet over there. They're probably going to go down this year 3, maybe 4 times, and it's usually not any more than 4 or 5 pair of shoes. They let us know the size they need if it's men's, and it's almost like a gym shoe. So last time we got it at Walmart. You can get it on base, you can get them at Target, and it was under $30. So we figured that that was something that our members would like to buy. And so Jane Summerall said she would take care of this. And I need probably about another 8, 9 people that would be willing to do that, to be called on throughout the year. So there is a sign-up sheet to add to over there at the end if you want to do that. And it's calling on you, and it's if you're not available or you're on vacation, she'll just move on to the next person, but we'll keep you on the list. So it's something that we can do, and hopefully people will sign up for that. So next, Mike Jensen, if he wants to come up. As I told you last time, for the Who Am I, we decided not to wait, that if a Red Badger would like to come up and tell us a little bit about him or her, that would be great. So Mike's still working on your requirements. You're almost there. But he wants everybody to know a little bit about him.
Thank you, President Luann and fellow Rotarians. This is long overdue for me. I had some health issues this past year, and so I was a little bit behind and playing catch up, but I'm better now, and I'm ready to get back to action. So my name is Mike Jensen, and starting at the beginning, I grew up in Camarillo, California. It's a small town, if you're not familiar, it's about halfway between Los Angeles and Santa Barbara off the 101. My dad worked at Point Magoo, and he also had a little side hobby of farming avocados. Okay, sorry about that. And so I grew up, and my childhood was spent on an avocado ranch in the suburbs of that area in the rural Camarillo. So I learned how to work real hard, not by choice, but just because. And then after high school, I went to Cal Poly, San Luis Obispo, where I studied construction management. I've recently retired, but my career was spent in the construction industry in a niche that a lot of people aren't familiar with, which is in the consulting side of construction, doing project management and cost consulting. And about 10 years into that career, I had the good fortune of joining up with a couple other guys, and we started a company in Orange County. There were just about a half dozen of us in the beginning. This was 25 years ago. But since that time, the company's grown to be pretty large, and we've got over 1,200 employees now and 36 offices across the country. But I am retired, as you can imagine, being the role I was as chief operating officer, very stressful, and didn't have a whole lot of time to myself. So I'm looking forward to now this new phase of my life. In terms of my family, I've been married to the same woman, Angela, for 35 years. And we have 3 beautiful kids. They're grown and out of the house, scattered around the country. And we've recently, within the last 5 years, moved here to Coronado, and we love it and are very, very happy. My hobbies and interests include bicycling, motorcycle camping, travel, road trips of any kind, really. And I still do get up to the ranch in Camarillo to help my brother and sister out, who actually still live on that same property. Anyway, in closing, when I was writing this up this morning, I was thinking, that really I've talked about who was I, not who am I. And what it prompted my thinking is that who do I want to be is really the question. And now that I am kind of entering this different phase of my life, I've thought about that. And I want to be somebody who gives back to the community. I want to be somebody who shares with other people that are maybe less fortunate. And I want to spend time with people that share those same values and thinking. So Rotary Club seemed to be the perfect place. And I want to thank Ken Bryan, my good friend, and Ivan for introducing me to the club. And I'm looking forward to volunteering and spending more time. And so here I am, and that's who I am. Thank you.
Thanks, Mike. That was well said. I think we all feel that way. So next, what I want to do is call up Wayne Strickland. I know he's here somewhere. Oh, right here. Come on up. Okay, we know who Wayne is, so we don't have to go there. But what I do want to say is in the Coronado magazine, the one that we just got, was a great article on the Coronado Bridge suicide. And I know that Wayne is a great Rotarian, has been for many, many years. And what he's done for this bridge, and he's stuck to it, everything that he's done to try to save lives, to get this bridge corrected, I think all of us owe you a lot of gratitude for that. And that's why for this month, I wanted to give Wayne a Superstar Award because I think he deserves it, especially for that bridge and trying to get the suicide barrier. So I think he should get a round of applause for that. And Wayne was my sponsor too, so. That it is, but you know what? You've led it, and you continue to lead it, and I know it'll eventually get done. So next, Ginger Cox, if she wants to come up, she's going to tell us about the IB, the food pantry. Again, I can't hear.
You didn't hear that, did you? One of Coronado Rotary Club's newest project and committee is the food pantry at the IB Neighborhood Center. And we are now collecting food as well as some men's clothing, and I'll explain about that in just a moment. The committee is headed by Jenny Johnson, by Carrie Sigenthaler, and myself. And we will be doing an ongoing project. How often do you go food shopping? Probably fairly regularly. Well, the food bank down in IB needs food that often as well. And so what we are handing out are suggested food items. And this fetching laundry basket I will be bringing to Rotary, but also it will be outside of my by my driveway, hoping that I'll get some donations from you all during the next forever weeks. As it turns out, we will be collecting the food that Jenny is handing out for now. There may be other food items needed later on, but this is what the food center or the pantry is asking us to collect. They also need men's, gently used, men's clothing, and that is listed as well on the flyer. They don't need men's socks or underwear right now, so please just stick to, if you choose to donate, stick to the list as far as the food and the clothing. Also, if you're a Costco shopper or a commissary shopper and you want to buy in bulk, we certainly would accept food items. Besides bringing your donations to Rotary every Wednesday, we have 4 locations on the flyer, perhaps closer to your home in Coronado, that you could drop the food off. I think that takes care of it. Okay.
Thank you, Ginger. Also, what I'm going to do for people that aren't here or they're not on Zoom tomorrow, I'm going to send out an email to everyone with this information on it. And again, you know, you go down there and there's a lot of people that are living in their car. They have showers Saturday that they allow people to take a shower for 10 minutes, and that's where the clothes come from that they need, gently used. So please, just take your time and fill up the baskets, and if you come on Wednesday, there'll be a basket here. So it's something that we can do and help our neighbor, and we'll continue to do that on and off. So next is Steve Dermeyer. He's going to tell us about Rotary Fellowships.
Thank you, President Luann. Thanks, President Luann. Good afternoon, Rotarians and all you guests. I'd like to talk about Rotary Fellowships briefly. It's not a quiz, but raise your hand if you think you can tell me an authoritative answer to that. What is a Rotary Fellowship? Tom, I knew you would. Howard, they're cooking it together over there, those two guys, yeah. A Rotary Fellowship, and I'm going to quote this right out of the website, Rotary International, international groups of Rotarians that share a common passion, hobby, sport, or activity. That covers about everything. But I'm going to give, by the way, there are 103 Rotary Fellowships. Quite a few. Here are some examples. Tennis, hiking, wine, triathlon, golf, surfing, RVs, motorcycles, cooking, genealogy, music, cycling, skiing, fine art, and yachting. Those are just a few. There are 103, and they've all been approved by Rotary International. The purpose of a fellowship is to network, and it's also to make friends. And as a longtime member of Coronado Rotary Club's ski fellowship group, it is a lot of fun. And you make new friends, and many of them are from other parts of the world, even other continents, you name it. They're there out there with you, enjoying whatever your passion and activity is. Now, come to this club. We have, now, there are all those fellowships out there. We have a very strong contingent that participates in Rotary International's skiing fellowship. We've been doing this for years. I think we started with Guy Zeller all those years ago. I kind of taken his place after his passing to kind of coordinate. And some people have expressed interest in doing skiing with us on a ski week regularly every winter somewhere. This past winter, it was at Banff National Park up in Canada, and that was attended by 6 of us. This winter, it's going to be at Park City, and we're going to have our own hotel right there in Park City. Headquarters, it will be for everybody who comes from all over the world. Park City, first week of March this year. Come and see me. We'll work it out. And next year, they're looking at Lake Tahoe for the winter ski trip as well. Thank you. Gosh, she bugs me, man.
Yeah, but I know you. That's why I have to. I know. Okay. And next, Natalie, she's going to come up. She's our vocational services board director, and she's going to do a little fun thing with learning about vocational services.
I just wanted to whisper too. I know. That's why it's fun. Hi, everyone. Is this loud enough? All right. Happy Vocational Services Month. If you didn't know, I'm the vocational director, and I have one job each year, and it's right now. So I think I got to every table except maybe that last one over there. But I kind of feel like a school teacher. I've made a little assignment. But the idea is just to get to know your fellow Rotarians on a vocational level. And a vocation, I always thought was just your job or profession. So I put some definitions here for you because I thought it was interesting that it doesn't have to be just that. It can be just any type of work that you feel you are suited to doing. So, if anyone has a job or career that isn't their vocation, that's okay. So Rotary started as more of a business gathering, and even though that's not really all it's about anymore, I think it still is nice for people who still run businesses or work in town to have these networking opportunities, which is why we do our networking meetings. So I hope you guys enjoyed having some conversations about your vocations. And now I'm going to call on a couple tables to answer some of these questions. And we're going to start with Wayne. I picked him before I knew he was getting all the attention. Wayne, do you have any answers to any of these questions?
So, question number 1.
I don't know what I
Over where? Right there.
Just one question.
Oh,
Just answer one.
does anyone at your table have a vocation that you've never heard of? Introduce that Rotarian or guest and tell us what they do. Well, Ari Van Voot, he is a ground traffic controller for the air. For the planes that are cruising on the ground.
Fun.
And if I can go further.
Sure.
So we have 2 lovely dentists, the same vocation. Natalie, right? And her beautiful mama.
I think so.
And we have 2, and we have 2 wonderful financial planners over here. And we have another person, so they both have the same vocation, another person that has something that I've never heard of, or at least I was surprised to hear of it, a volleyball referee, Dan Orr.
I didn't know that. Thank you so much. Thank you, Wayne. All right, table in the back over there. Who did I assign? Carol? You really only have to answer one of these questions.
At our table, we have two guests from Kansas City, which we've enjoyed finding out what they do. And we have a PR management person and a software. This is old age, you forget things. Anyway, and also on my right here, we have our favorite past president, Mr. Lowline, who's an aspiring actor. He thinks that's his new vocation. Movie star.
Thank you so much. I think I assigned Rob for the next table. Was that right? I know, we're good. We got plenty of time. 4 minutes.
All right. I really shouldn't be doing this. It also already says past service on my badge.
You're still on the board.
Oh, I'm still on the board. Okay, fine. All right. So we had a lively discussion on my side of the table. I couldn't hear everybody so well. We have over here. We have two recovering attorneys. One recently retired, and one has moved on to teaching at USD, which I thought was really good. Unfortunately, it was more law that they're teaching, but what are you going to do? Dominique here is in real estate, has her own company, but I just learned that was not her primary job before. She was a school teacher and also a teacher of parolees, and so maybe Luann spent her past career catching them and you were giving them bachelor's degrees or something. I don't know what. HR people over here, Erica, Jacqueline, and Kit. Okay, thank you very much. Again, I didn't hear the other side too well, and thank you.
Dave, I said there were no prizes for this game.
Yeah, I was asking for a prize. I'm joining Ed Lowline, and I'm studying to be a pole dancer.
And over to the next table, I think we have time for one more. Tom Mitchell, do you have any answers to any of these questions?
Well, we have a very strange table here, as you can imagine. First of all, do you have anyone that has a vocation never heard of? Well, I've heard of it only because of her philanthropy, Carol Summers. Yeah. So, yeah. No, yeah. And then do we have any people that have the same? Well, we got 3 old Navy retired captains here. So, Jerry, Ivan, and myself. Okay. Now, the last one says, do you have someone at your table that has a vocation that's not their primary? I've got to go back to Carol again. And she confessed, she didn't want to talk about it, she was a lady of the evening.
Wow.
Yes, can you believe that? And if you don't believe it, come to her house tomorrow, 5:30, okay? We'll see you at 5:30 tomorrow, so.
Thank you so much, Tom. I certainly did not think that was going to take up 10 minutes, so I think we're going to have to get to other tables a different day. Thank you, guys.
Thank you, Natalie. That was fun. All right, so now it's time to introduce our past district governor, past president Dan Gensler, to introduce all of the people for our financial forum.
All right, Jane, Rainier, Haley, come on up. Well, thank you all for indulging us to share our passion with you all today. Doesn't this group look just amazing today? You all clean up quite well. All right. So what I thought we'd start with is, you know everybody up here, but I still want to ask all 3 of you to just do a couple things on the introductions, and that would be name, firm, how many years you've been in the business, and also if you could share a personal fun fact that nobody knows about you. Ready, set, go. Jane.
Good afternoon. My name is Jane Brown. I've been in the business for 42 years, the financial services industry. The name of my firm is Plan to Prosper here in Coronado, an investment advisory firm registered with Commonwealth Financial Network. A fun fact was I was a long distance swimmer in high school and college and also did synchronized swimming.
All right. And Haley.
Hi, my name is Haley Beard, and I work with Edward Jones over at 10th and Orange. I've been in the industry for 15 years now, and a fun fact about me is I like to scuba dive.
Good. And Rainier.
Hi, everybody. I'm Rainier Trinidad. My company is called Parabolic Asset Management. I've been managing investments for 23 and a half years. Let's see, a fun fact about me. Last year, I entered the U.S. Investing Championships, and I am currently ranked 15th in the nation. So.
All right. Good for you. Good for you. All right. Well, thank you all again for coming today and sharing your wisdom. I want to just start with the markets that we all encountered this past year was not fun for any of us, was it? So we saw the S&P 500 was down over 20%. The NASDAQ down over 33%. The Dow is only down about 9%. The Dow is just a package of 30 companies, so it's a smaller representation. And so what I'd like to ask the panel is, what do you see as the biggest risk and the biggest opportunity as we look ahead to the markets for 2023? Rainier, let's start with you.
I think the biggest risk is inflation. That's always at front center of the market. There's a lot of expectation that inflation is going to come down, and the markets are pricing for that inflation to come down. But if you take a look at the consensus estimates and what actually results, the estimates are consistently overshooting the actual numbers for inflation. And historically, whenever inflation has reached like over 8%, it tends to be very, very sticky, and it's not going to come down as quickly as the markets expect. And if that happens, then interest rates will probably stay higher and longer. So that's going to be a risk for the market. Go ahead.
And the biggest opportunity?
Oh, the biggest opportunity? Let's see. Well, every single time that you have a big bear market loss, the following year tends to be really strong. And so you also have that historical precedent that the markets come back, but they usually rebounds after the recession happens, and we are about to head into a recession. So in the latter part of the year, we can possibly get a nice recovery. And another opportunity would be if the war in Ukraine ends. You know, Putin could fall out of a window and the market would go up like 5%. So the cessation of the war would bring inflation expectations down and make the market go higher.
Great. Yeah.
Thanks, Dan. I would agree with Rainier. We are definitely at a point where inflation has hurt us, and we've all felt the crunch in 2022. And I think that we should expect for inflation to remain somewhat high in the near term, and maybe even ongoing. I think another risk that we see along with inflation is that we have a growing population of folks that are just not saving enough. Financial literacy isn't taught in schools. And a lot of these young people are not putting enough away and not being thoughtful of what retirement's going to look like for them. So it's a double-edged sword there with not saving enough and then the inflation concerns. So I feel like that's a really big risk. But with that, with everything that we saw in 2022, there's a lot of opportunity. A lot of the stocks are well under their fair market values. It's a great time to encourage young people and ourselves to meet with these great financial advisors in our local community and talk about budgeting, talk about saving, and looking for opportunities to put funds away in investments that are trading at a lot lower than they have been in the past.
Good. Thanks, Haley. And Jane?
Thanks, Dan. I would have to say, just on an intellectual basis, I would say the black swan events. It's, you know, what we can't predict, what we don't know, what kind of comes out of left field that no one was anticipating. But as a practitioner, I would say that the biggest risk is not having a plan, because A goal without a plan is just a wish. And as a financial practitioner, that's what we do in our firm, is to help people articulate what is it they're trying to accomplish, what's their time horizon, what's their risk tolerance. And that way we can start to put down in writing what the actual plan they're trying to accomplish. So is it retirement, accumulation of assets? Is it distributing assets over a lifetime so that money lasts as long as they do or their family does? Is it leaving a legacy for those they love? But I think, in my opinion, in my humble opinion, not having a plan is the biggest risk. The opportunity, I'll be more pragmatic here, given that interest rates did rise so precipitously in 2022, I think there is a good opportunity for savers to have a return on their investment, or on their putting money away into fixed income, certificate of deposits, those type of fixed income assets. So I think that's where it may not be the biggest opportunity, it's an opportunity that hasn't existed for a long time. So that's something that people can look forward to, is to have an actual interest rate of return on their cash assets.
Great, thank you all. So inflation's been mentioned a couple of times. I'd like to talk a little bit more about that. And so if you could kind of just spend a few minutes on inflation, what is your outlook for inflation? How is inflation going to affect our equity markets? What risks or conditions may occur as a result of prolonged interest rates and or inflation that we're experiencing now? So if you could spend a few minutes on that, and Jane will just keep going back and forth, reversing the order here. So if you want to start.
Sure. Again, it goes back to having a plan, but I think that's where your growth assets. I think that investors can be very concerned about volatility, right? It's putting our money into assets that have appreciation potential means that they can also depreciate in value. But if we're in an inflationary period, which we most definitely are, we want to be owning real assets, and in particular, we want to be able to have a certain allocation that goes into the stock market. So that equities could be growth stocks, or they could be value stocks, but I think for right now, a good play, given the inflationary environment that we find ourselves in, to be in dividend-paying stocks. You want to look for good value. So even when I say value stocks, I'm not necessarily saying deeply discounted stocks, because those could be what we call value traps. You don't want to try and catch a falling knife, but when you look at investing in equities, and particularly dividend-paying stocks, you're going to have companies that are going to have strong balance sheets, good cash flow, they have good management, perhaps have a wide moat within their subsector or sector or industry. That's all very favorable for positive potential for return in an inflationary environment.
So on the inflation piece, I think the housing market's seen a lot of the impact from the recent increases in rates, and mortgage prices rates have gone up significantly. But I don't think we've really felt the full impact of the interest rate increases, and we should probably expect for continued economic slowdown, and maybe even corporations to decrease or pull back on a little bit of their spending. That could impact their corporate earnings in the short term or near term. And it's still going to continue to impact our budget from a month-to-month standpoint. On the bright side of that, with interest rates increasing and now starting to come down a little bit as far as the increases that we're seeing from the Federal Reserve, fixed income assets, like Jane had said, are more favorable today than they have been in a very, very long time. And so with the value of the dollar coming down, stock prices at a great value, it's a great opportunity for you to meet with your financial planner, create a plan, review your plan, review your allocation, and look for investments that have opportunity to rebound and pivot through everything that we've seen, and be able to provide the amount of income needed to meet the inflation requirements that we have for today and ongoing. So I'd encourage you again to talk to one of these nice folks and make sure you're being very thoughtful of the costs continuing to stay pretty high.
As for my outlook for inflation, like I mentioned before, when you look at the data, once inflation spikes up to really high levels, it takes a really long time. It's very sticky. It hangs around for years. And so because of that, I think the Federal Reserve is going to have to keep their interest rates a little bit higher, a little bit longer. And when that happens, hey, you can look at your short-term bonds. They're paying 4.5%. Soon it's going to go up to 5% or sometime later this year. And you have the substitution effect. Do I want to have a 4.5%, 5.5%, guaranteed rate of return versus an uncertain 5 to 10% return on stocks? So as long as these interest rates are going to stay high, then it's going to provide a headwind for the valuations for the stock market. And the stock market, it's highly dependent on monetary policy. We've seen that. There was a study done that shows there was about a 98% correlation between the money supply growth or contraction and the future returns of the S&P 500. So the real question is, hey, what's monetary policy going to be going forward? And the Federal Reserve has projected that they're going to be shrinking their balance sheet from about 8.9 trillion to about 6 trillion over the next few years. So as long as we have that, interest rates will probably continue to provide a headwind.
Great. All right, just to get technical for a little bit, in the last decade, we've watched international companies, small cap and value-based companies have really lagged our markets on an overall basis. The returns have been very dominant in the large growth category. So, and again, this is the better part of the last decade. What are your thoughts as we look forward as far as any kind of style shifts or allocation shifts as it relates to this value growth, small cap, large cap, international, where the trend has been and where are we going in the future?
Okay. I think you should always have an exposure to growth in your portfolio, and every single year the question is, hey, is value going to outperform? And it'll drive anybody mad trying to figure out what sector is going to outperform or not. So I like to just hold a nice stable basket of the S&P 500 so you capture both of those. Now the bigger question is, what about international? Well, if you take a look at the charts on the international, it's actually starting to break out. It was about like a 12, 13, 14-year downtrend, and it's finally starting to go break out right now. So I think it makes sense to have an allocation to international. As for small cap stocks, that's still in a downtrend. The valuations are also very good. But when it comes to international and small cap stocks, it's kind of like the Lucy and Charlie Brown situation of trying to kick a football. Am I actually going to have some outperformance in that sector this year finally? And then they always yank it away at the last second. So take that part with a grain of salt. It always has this promise because it's cheap and it looks like it's going to be coming back, but it often has a way of disappointing. So I would just keep a market weight allocation to those names.
Thanks, Dan. I agree with Rainier. It's so funny to hear you say those things. It's the thought around internationals has always been that it should be a smaller portion of your portfolio due to the performance over the long term. I think we have to be realistic that there's still a lot going on in the world, and geopolitical tensions are still running very high. It's sad what's happening over in Ukraine. The dollar is at a 20-year high, and the Fed has increased rates at a much higher pace than other central banks. So with the dollar potentially coming down or softening over time in 2023, we think that the improvements that we'll see on the global scale should improve and turn around, maybe even recover by the end of the year, but it's going to be a slower pace than what we're seeing here in the United States. There's value in emerging markets, especially with China reopening and waiving some of their restrictions. The COVID policy and the stimulus that they had made things difficult, and bottlenecks happened with the supply chain. So we're hopeful that China will be able to re-accelerate. The European economy is still feeling a lot of tension with gas and food. I think we've already priced in some of that recession that we're seeing within Europe. But overall, we still favor the U.S. growth holdings, those big blue chips within the portfolios that we work with. keeping international in mind, keeping a portion of it in your portfolio will help you with diversification, but we don't feel that anyone should be overweighted. But it's up to you and your risk tolerance and what you feel most comfortable with.
So I think most investors have a U.S. home bias, but it is said that over 75% of the world's GDP comes from outside the U.S. I know that's kind of hard to wrap our heads around, but it's because of, well, let's just say, I think we could agree that over 50% of the world's GDP comes from outside the U.S. It is an imperative to have some allocation to international, but to the point that both Haley and Rainier have made, gosh, and Dan as well, looking back over the last 12 years, it just really hasn't been a positive contributor to the equity performance. But looking at the allocation, somewhere between probably 10% of the equity allocation should go to international, and that could be, split up between, let's say 80% of that 10% could go to the developed markets and 20% to emerging markets. But in an overall financial plan, if you're going to have really a well-diversified plan, you do need to include an international allocation. So I use, active fund managers. That's my bias, using mutual funds or ETFs. Certain clients are not in favor of investing in China, and so these days you can find ETFs that'll be international ex-China. So I think that gets into that whole conversation of, are there any investment restrictions that an investor would like to put on their portfolio, considerations of socially responsible investing as it relates to a person's own individual values. But it's imperative for us as financial professionals to talk about the international component. And to Rainier's point on small cap, small cap just for us personally right now within our practice is a market weight. But as the economy does start to recover, and if this recession is a shallow recession and we start to come out of it in late 2023 or into 2024, small caps is a very good place to be. So again, it's about having that asset allocation so that you have the opportunity to be able to be where outperformance is going to come from. It's kind of that Wayne Gretzky metaphor about you want to skate to where the puck is going, not where it is right now.
All right. So over the last decade, the Fed has been extremely cautious with interest rates. We've seen a very low interest rate environment, again, for the better part of this last decade. In the most recent years with COVID, the Fed took rates down to zero. So we had money was free. It was flying all over the place. And we all saw this with our property value increases, the stock market changes, and so forth. Now suddenly, February of 21 starts coming around, and some of the policy changes are starting to come into effect. In March, we see the first interest rate hike that we had seen in quite some time. And over the course of the 9 months that followed, we saw rates go from 0% to 4.5% with the Fed. And they're not done yet. So the question is, where does that end? And more importantly, when I come back to you guys on this, the question that I have for you now is, how has the Fed done as it relates to, are we going into a recession? We keep hearing this word recession. Is this a soft landing or is this a hard landing? So Jane, let's pick it back up with you.
Well, the whole litmus test, if you will, for being in a recession of, 2 quarters of underperforming growth. I mean, I think we can all agree that we are in a recession, but I think also that the Fed's not going to stop. I mean, they've, telegraphed that they're not going to stop. So we're going to see a couple more interest rate hikes coming from the Federal Reserve. But they did flood the economy with an overabundance of cash, and as Rainier talked about, in the money supply, and now, are they having this tendency to overcorrect? But I think we use that to our advantage. We look at, as we've already talked about, using those fixed income investments that even on the short term side or the shorter end of the curve, you're going to be able to pick up, 4 to 5%, and that's a good place to participate in what's happened with the rising interest rates over the last year. But the Fed is certainly not done yet.
So, I hear everyone's frustrations about interest rates going up, and we've all felt the crunch of the market volatility recently. I don't think the Fed is doing anything intentionally to throw us into a recession for fun, right? This is a strategic move to help bring inflation down, to protect the economy, and make sure that we're in a good place tomorrow in comparison to where we are today. We've got some CPI report coming out tomorrow, so that should give us some more information upon what we should expect for the end of this month, beginning of February, with the Federal Reserve meetings. Like Jane said, there is going to be continual increases that happen. We don't think the Fed is going to stop at this point. It's probably going to get over 5% as far as the interest rate increase over time. But will that be a soft landing? Yes, we feel, Edward Jones analysts feel, that we are still in line with a soft landing. Downturns are never desirable. They never feel good, but they're part of the investing world. There's always going to be risk involved with it. And although 2022 wasn't a bear market, it largely priced in a lot of the recession that we're in and we're seeing. So it's a great time, again, to look through your portfolio, take advantage of fixed income assets, CDs, things that fit your personal risk tolerance, that meet your income needs, and allow you to continue to weather this storm, because it will potentially be bumpy for a little bit. But don't think of it just in the next 12 months. Let's think long term. We're planning, we're creating a plan through your lifetime. We're making strategic moves to ensure that we're not just thinking of your needs today and the volatility we're seeing today, but through the long term.
As for where the Federal Reserve is going to stop interest rates, they pretty much said, hey, we're going to go to about 5 to 5.25%. And the market doesn't believe them, and I think they're going to hold their word there. In terms of where it'll eventually end, there's actually an economic formula called the Taylor rule. And this is the formula that tells you where interest rates should be to put the economy and inflation at equilibrium. And it's done a remarkable job of telling you where it should have been. Back during the Alan Greenspan era, his level of interest rates were very close to what the Taylor rule said, and we had a fantastic economy. Lately, the Fed funds rate has been far below the Taylor rule. That's why we've had so much inflation. Now, this Taylor rule basically says inflation and the economy where things are at, it suggests the Fed funds rate could go as high as 6%. Now, this is a very unpopular opinion, and not a lot of people are talking about it, but Jamie Dimon at JP Morgan said, hey, I think interest rates can go up to 6%. So there is some precedent for this. But right now, since the Fed says 5 and 5.25, I'm going to believe them on that. And with regard to the soft landing or a hard landing, so the soft landing is when you can raise interest rates and bring the economic growth down just to the point where it doesn't go into a recession. If you take a look at the relationship between the short-term bonds and the longer-term bonds, you have something that's called a yield curve inversion. And every single time you have a yield curve inversion, we have had recessions. And so this yield curve inversion that we're having right now, where short-term interest rates are so much higher than the intermediate and longer-term rates, we are definitely going to have a recession. So my call is we are going to have a hard landing. But like what Haley said, a lot of it has also been discounted in the markets. So I think it's good to have a defensive posture. And historically, once the economy does go into a recession, that's when the markets bottom. So looking forward to a fairly shallow recession, and then just looking for the recovery for the latter part of the year.
Great. All right, now we come to the very specific question for you all. Here we are in 2023. What can we look forward to as we finish this year? What kind of return from an overall market perspective? So I'm talking about a well-diversified equity market. What kind of returns should investors anticipate for this coming year? If you could each get your crystal ball out and give me a solid answer on this.
All right, so if you take a look at where the strategists are all saying this market is going to be, we haven't had this level of uncertainty since 2009. So 2008, we had this horrible bear market. 2009, strategists were unclear as to where the market was going to go. And when you have this high level of uncertainty, uncertainty is actually a really good source of returns. And so in 2009, we had a fantastic year. This year again, the year after a bear market, we have another high level of uncertainty among strategists. So I think as long as you have this high level of uncertainty, it does provide a lot of potential for the markets to rebound. Where do I think it's going to go? My best guess is probably single digits because we are still going to have contractionary monetary policy. Again, if there's a very high correlation with the shrinking money supply and the S&P 500, that's going to provide a headwind.
Give me a number.
Oh boy. Okay.
Give me a number.
I'm going to say 8%.
8% in the equity market.
Positive by the
Okay.
end of the year.
All right. Haley.
This is so funny to me. You guys crack me up. We're only 10 days in. Or is it 11 days now?
Hey,
I have
see?
I have a 2-year-old, so I'm sometimes not sure if it's Tuesday or Wednesday, but today is Wednesday because we're at Rotary.
Yeah.
So we're good.
Yeah.
I'm just kidding. So I think, again, we're going to have a little bit of a bumpy ride with 2023. There's likely to be continued Federal Reserve tightening. We believe that we're headed into an expansionary position in 2023. It's probably going to be towards the end of 2023, but we're looking at more of what we believe to be a U-shaped recovery. So I agree with Rainier, and I think most people would say, most analysts would say, that we're looking at single digits. There's still going to be a lot of pressures coming from geopolitical things happening in the world, and there should be continued volatility and emotional reactions that happen from those. It's probably not going to be a deep or prolonged recession is what most folks are saying, whether it be Edward Jones or Vanguard or JP Morgan Chase, but corporate profits will be impacted. Volatility should continue, but there's a lot of hope in 2023, and I feel like from everything I'm hearing and seeing, we are on an uptick that should happen later in the year.
Give me a number.
No numbers, Dan.
Come on, Haley. Oh,
I don't have that crystal ball, and I'm not making those
it's all a
bets.
guess.
Yeah.
All right. All right. You're going to pass on the number. Haley, pass. Higher than 8%? Oh, higher in general? Okay. All right. All right. Jane.
I'll give you a number, Dan.
Give me a number. Okay.
I'm going to say 6%, because I think that the 60-40 will work now, because in the 60%, if you have that in fixed income, given that you're going to get a positive return, and 40% in equities if you stay defensive, and that would be including those dividend-paying stocks, staying in the sectors such as utilities and consumer staples, industrials, financial services stocks that include dividend payers. I think achieving a 6% return is a reasonable expectation.
Okay. And just last but not least, and this is a quick one, anybody have a stock pick, stock suggestion?
Southwest Airlines. Put a limited order in at $28 a share.
All right.
A stock pick. Let's see. Well, I've been thinking about this for a long time. I actually like an ETF, so it's not really a stock pick, but it's XBJA. This is an ETF that gives you 9% downside protection in case the market falls. And in case the market rises, it gives you twice the return, up to a cap of about like 17, 18%. So since I am a former hedge fund manager, I do like to hedge my bets, and that is a really good place to go park capital, where you have protection if the market falls, and if the market goes up, you'll also participate at twice the rate.
Very good. Haley, did you have anything you want to add there?
You know, I know this could potentially be recorded, so no, I do not. But I will say, you know, there's a lot of opportunities within the equity market, and a diversified portfolio is great. Edward Jones puts out a great perspective. If you want to take a look at it, it has the stocks broken up by each of the 10 sectors, and it highlights all of the areas that they feel are opportunities within each sector. So if you'd like to have a look at that, I'd be happy to share it.
Well, thank you all. Let's thank our panel. Thanks. All right, guys. Good job.
Okay, thank you. I want to thank Dan and Jane and Haley and Rainier so much for that. So next week, we're back here again at CYC. And our speaker for next week is the U.S. Attorney, Randy Grossman. And he'll be giving us a legal update on cases and so on and what's going on at the U.S. Attorney's Office. So everybody go out and have a great Rotary week.